The stock market can be confusing and intimidating, especially for those new to investing. However, it is essential to separate facts from the rumored story to make informed investment decisions. Hello and welcome to today's video. I hope you are doing great. In this video, we will dissect some of the most persistent myths about the stock market and explain why they are invalid. So let's dive in and separate facts from the myths in the world of stocks. First is timing the market is possible. This is a common misconception that some investors believe they can actually predict when the market will go up or down and make trades accordingly. However, it is impossible to consistently time the market as stock prices are influenced by numerous unpredictable factors such as economic data, company performance, and investor sentiment. Trying to time market can lead to missed opportunities for gains and increased risk of losses. Next is stocks always go up in the long run. While it's true that stock market has historically gone up in the long period, there can be short-term dips and crashes. No investment is guaranteed and the stock market can experience periods of volatility and declines. Moreover, it's an overall stock market sentiment that goes up. Still, individual stocks might crash due to some unknown accounting frauds or scams. Next myth is high-risk stocks always offer high returns. High-risk stocks may offer the potential for high returns, but they also come with possibility of significant loss. It's essential to consider risks associated with the individual stocks before investing and to diversify your portfolio to reduce overall risk. Most people get stuck with the bad stock as they get trapped in the pump and dump schemes and lose their hard-earned money. Next myth is diversification means no losses. Diversifying your portfolio can help reduce impact of individual stock losses, but it does not guarantee against overall portfolio losses. No investment strategy can eliminate risk, and diversification should be part of well-rounded investment plan. Next myth is only professional investors make money in the stock market. With education and research, individual investors can also make informed decisions and potentially earn returns in the stock market. Many of the resources are available for individual investors to learn about different stocks and investment strategies. It's essential to take time to educate yourself before investing and get rid of this myth ASAP, as this can be roadblock in your learning. Next is very popular myth which says high stock price means a good company and low stock price means bad company. It is entirely false. A high stock price doesn't always reflect company success. Similarly, a low stock price doesn't always indicate that a company is in financial trouble. The stock price depends upon several factors such as market capitalization and number of outstanding shares. Also, may be influenced by factors such as investor sentiment or speculation and may not accurately reflect the company's underlying financial performance. Next myth is you need a lot of money to start investing. This is the most common thing I hear when I ask someone why they don't invest. Although I agree, I might not be able to judge anyone's situation on money, spending and saving or investing, as a persona of money is different for everyone and everyone is correct. But many investment options including stocks and mutual funds allow you to start investing with small amount of money. You don't need large sum of money to start building your portfolio. Next myth is funny, like stock market is only for the wealthy. But this is completely false. But actually, stock market is accessible to anyone with a brokerage account regardless of their income or net worth. Most rich people have become wealthy by investing only. Regardless of their financial status, individual investors might consider using stock market to grow their wealth over time. Final myth for today is the stock market is too risky. While there is always a level of risk involved in investing, the stock market has historically been long-term investment vehicle for many investors. With planned diversified portfolio and holding on to good stocks for long term, you can earn returns while managing your overall risk. So that's all for this video. If you know any other myth, feel free to share in the comment section. If you like the content, please consider subscribing to my channel. See you next time. Nikhil Dhawan signing off.